Shilpa Raidas, the marketing strategist of Indiacharts, and welcome to the midweek with Indiacharts. Today we have Jay Vora with us, as always, the technical research analyst at Indiacharts. We are very excited to know the midweek market analysis with Jay. So, hi Jay, how are you doing?
I'm doing great. How are you?
I'm doing very good. Thank you so much. So, Jay, beginning with the questions we are going to bombard on you. What we have seen is in the past couple of weeks, the equity markets have seen some correction. The Fitch has downgraded US credit rating from AAA to AA+. Bond yields has hit a new high. How do you look at the current scenario and Fed Powell going to speak at Jackson Hole? What do you expect from that, and how will the market react to it, Jay?
Right. So actually, we have not done this midweek for past 3 or 4 weeks. So a lot has happened during that time span.
Yes.
So we'll try to cover everything. So first thing, market is right now focusing a lot on what Fed Powell is going to speak at Jackson Hole. So on that, my take is that if you follow what Fed Powell has said in the last 3 to 4 press conference after the policy meet,
Right.
you will notice that they have been consistent, okay, to what they are saying. So what they had said was that, they will raise the benchmark rate or the Fed fund rate to, say somewhere around 5.5 or so. Okay. So they have already gone there. Okay. Right now, the Fed fund rate is at 5.25 to 5.5. And they had said in the previous meet that there can be a possibility of one more rate hike. Okay. But that will depend a lot on the data. Now, if you see, also they had said that they eventually want to decrease the pace of the rate hike. Okay. So first it started with 75 basis point. Then they went lower to 50 basis point. Then they did 25 basis point. And now and then what they communicated was that they will try to hike in kind of say in an alternate meetings. Okay. So basically the rate of pace will keep slowing down. So that is what they had communicated, and so far they have stuck to that. Okay. So if we go by that thing, okay, then in September meet when the Fed policy is there, that time most likely rate should remain unchanged. They will look at the ongoing data which will come, and based on that they will decide whether in the November meet they will hike or no. Okay. But in September meet, I'm expecting that rate hike won't be there. And now when we look at the data points, okay, they are kind of mixed to strong. Okay. There is no weakness as such in the data, because when we see the unemployment data, that has cooled off a bit, but it is still pretty much strong. When we see the CPI data, okay, it has cooled off, but the core CPI hasn't cooled off substantially. Okay. It is still at higher level, which I think is above the tolerance band of Fed. Okay. So there are few things, which are falling in place. But if you see the retail sales or the home sales, then this time even the PPI data, which is the purchase, the PPI data, which is the producer price index, that had inched higher. Okay. Now the fear is, kind of igniting that we will again see a bout of inflation, because crude has come up in the recent days. So, people are anticipating that the inflation will come up. So in that expectation, bond yields are rising higher, and that is kind of creating a chaos. But we need to see how the data comes. But if we go by what Fed has said, I think one more rate hike is possible. That too probably in the November meet, and a full effect of that once it kicks in the economy. Okay. And then there is a slowdown. That's when the Fed will assess whether more rate hike needs to be done or no. But as of now, I think that will be the communication. If that is the communication, I think that is something that market knows, and there may not be any wild reaction. Okay. If it says something beyond what what Fed Powell has discussed in the past few meetings, then there can be some nervousness. Okay. So that is my sense to how Fed Powell will kind of try to communicate to the market. Now, when we look at the charts, okay, let
Okay.
me share my screen.
Yes, please do.
So when we look at the S&P 500, so yes, there has been 3 to 4 weeks of correction, but if you
Right.
see over, it is coming back towards the 20-week average. Okay, now
Right.
that should really act as a very good support level. Okay, and the expectation is that if we get a positive weekly close somewhere over here, the short-term correction should be done and it should be headed higher, because in overall
Okay.
terms, the wave count is wave one. This entire thing was wave two. Okay. Now this is wave three that is unfolding, and within wave three, this is wave one, wave two, wave three, and right now we are seeing wave four correction. So wave
That's
five of
right.
three should eventually unfold. Okay. So that is on the S&P 500. Now one
Right.
data is puzzling. Okay. And even I am not sure how to think about it. But when we look at the dollar index, okay,
Right.
it is now today trying to break out of this falling channel. Now,
Okay.
typically, you would see that when the dollar index is breaking out, okay, you would see commodities going down, okay. But
Right.
in the past few days, you will see silver has rallied, gold is now starting to rally, copper has rallied, okay, and it is at the 20 and the 40-day average, which are crucial resistance point. So
Right.
it's kind of puzzling to see what is happening in this space. One of them is wrong. Basically, either commodity is wrong or the dollar index is wrong. Okay.
Okay.
And the other thing is that when we look at the USD INR, okay, if
Right.
the dollar index is rising, then ideally USD INR should be hiding as. So ideally, USD INR should be rising as well. Okay. But
Okay.
if we see over here, then USD INR has seen a sharp fall as we speak. Okay. So again, it
Okay.
needs to be seen how USD INR reacts in the days to come. But all this is pointing out towards actually dollar peaking out. Okay. And even our broader view is that what we are seeing right now is just a pullback of the fall which we have seen. Okay. So
Okay.
ideally, it should have halted somewhere over here. Okay. But the worst case scenario could be back towards the previous high, I think, which is somewhere around 105.8. Okay. So
Right.
if at all we go over there, there can be some nervousness in the market. I mean, I'm not sure how basically the market will react, because even today it has inched higher, but more
That's
or less the
right.
market is stable. So that is where we need to see how the reaction is. But yes, I mean, couple of things which are happening right now is a bit puzzling, because I mean, dollar index also rising higher, commodities also rising higher. That is something, that cannot last long. Basically, something has to
Right.
reverse, either the dollar index or the commodities. And if the
Commodities.
dollar
Correct.
index reverse on the downside, then ideally, equity markets and all the risky assets, basically that's where the funds will flow in, and that
Right.
should be positive for that particular asset class.
Okay. So that was very insightful, Jay, and very clearly explained. Given that what is happening globally with respect to inflation, growth slowdown, etc., most of the people are anticipating that Nifty index can see a big correction in the days and weeks to come. So therefore, most of the time, most of them are either not invested meaningfully or they are not convinced with the rally. So sorry. So what is your take on it, Jay? Which are the sectors that can outperform according to you?
Okay. So see, firstly, I fully agree that, there is kind of, I mean, people have not been able to be on top of this rally, because over here,
Right.
the US index had corrected, say 20-30% or so from the top. We had barely corrected anything. Okay. So yahan
That's
se
true.
rise aaya, that was something which people were not able to digest. And now this rise has actually happened without any major correction. Okay, from the bottom. So that's where I mean, people are feeling left out, because in this entire rise they were not able to participate because there was not any meaningful correction. Okay, and now that there has been some correction, so now people are talking कि crash हो जाएगा, economic data ऐसा है तो ये हो जाएगा. So those all things are happening. Okay, so fine. I mean, I agree to the fact that things are not so great at this point of time. There are concerns, and that is that is rightly pointed out by everyone. But as
Right.
bull market climbs the walls of worries. Okay,
Right.
and that is what seems to be happening over here, because Indian market has been relatively very strong, despite there has been correction globally. Okay, I mean, there has been meaningful correction from time to time, but Indian markets have been very strong. And I think there is one thing which people need to understand is this chart. Okay, this is basically Sensex index. I have taken Sensex because it has more data. So what this chart on the downside is telling you that it is the ratio chart, which means Sensex divided by Dow Jones index. Okay, Dow Jones Industrial Index. When this ratio is rising, okay, that is the time when India is outperforming. Okay, when the ratio is going down, India is underperforming. Basically, Sensex is underperforming. Okay. So you can see over here that in the phase of 1995 to 2004, this was the phase where largely it was a sideways sort of trend. Once this broke on the upside, India actually outperformed. India saw a big bull run, but Dow Jones was barely able to come back towards the 2000 high. Okay. Now I am sensing that something of similar sort is possibly repeating over here. Okay, I mean, we have been in this big range, and now I think once the range breaks on the upside, it will mean that Sensex is likely to outperform the US indices. Now that I'm not saying decoupling, okay, because this is one thing I have made it very clear. I mean, there is nothing sort of decoupling. There can be outperformance and underperformance. Okay. In which case, what I mean is that if the US index corrects, okay, not necessarily India corrects a lot. Okay, they might correct very less, and they might be resilient. And when there is a pullback in the Dow Jones index, that time maybe Nifty will outperform or the Sensex will outperform. That is what I'm trying to say. So basically, when we see this ratio breaking on the upside and actually sustaining at higher levels, that's where you can probably say that Indian markets are going to outperform, and we might not really see one-to-one sort of correlation. Okay. So अगर Dow Jones 10% गिरा, तो maybe Indian markets can fall 2, 3, 4%, but not 10% or so. Okay. So that is what I'm trying to say, and this chart in that sense is very important to understand, because once you have that mindset कि Indian outperform होगा, वो ज़्यादा US को correlate नहीं होगा. So at that point of time, when there are troubles over there, it might be because of their own doing. Okay. But at this point of time, Indian markets are on a very strong footing, and everyone knows that looking at the economic data. So that's where then, once you are very focused on that part, so then you know that ideally, if at all we see a meaningful correction, that's where, we are going to get a meaningful buying opportunity. Okay, that's where you will then start doing your homework as to which stock to buy on corrections and all. Okay, so the reason for discussing this chart is that to understand the mindset that you need to have. Okay, so once you have that mindset, then probably you will be in that right direction, that what you have to do is something that you will know. Okay, now when we look at the Nifty chart, okay, I mean, this is the Sensex chart, but obviously Nifty is the same. So see, you will see one thing. Now, as you said that, many people are telling that there can be a big correction and, they can fall a lot. But it is very important to understand and trust the chart firstly. I mean, there has been a breakout after 18 to 20 months of consolidation. Okay. So what has happened is that there was a rally, there was a runaway rally, and now we are seeing a pullback. So I think as long as this retest point, which for Nifty is somewhere around 19,070 kind of levels, okay, or the 20-week average. Wait, I'll open the Nifty chart only. So see, this is the breakout point which I'm talking about. Okay, when we zoom out, this is the breakout point. So the breakout point is right now, say, somewhere around 19,070 kind of levels. So either that or the 20-week average, which is this orange line, that is right now at 18,818. Okay.
Yes,
As long
yes.
as either of them doesn't break, I mean, whichever is lower, okay, that
Hmm.
doesn't break, the idea would be to think that the correction which we are seeing from the top is just a
Hmm.
normal pullback, which we have seen after a big up move. Okay.
Okay.
And eventually, once this correction completes, then the
Hmm.
idea would be to that the uptrend shall continue. Okay. It is
Okay.
only when the orange line, okay, which is right now
Right.
that I highlighted, which is
Huh?
right now say 18,880.
Hmm.
Again, this is a dynamic level. Okay. So next week the
Hmm.
value will change because this is the average of last 20 weeks. So
Okay.
whenever that breaks, or the this retest point, which is
Hmm.
19,070, whichever is lower, if
Hmm.
that breaks, then that will be probably the first point where I'll be start getting a bit concerned. Okay. Not bearish, but I'll be start getting a bit concerned as to
Hmm.
whether this bigger rally is reversing. Are we going to see a deep correction or no?
Hmm.
Okay. So that will be the first point at which I'll start thinking more, about how the macro is and all.
Okay.
So that is on the Nifty index. Okay. Now
Hmm.
your question was that if that is the case, then which are the sectors that you should look at? Okay. Before that, there is one thing which I want to highlight to the viewers. See, nothing goes in one straight line. Okay. I
Right.
mean, we had seen this runaway move, and now we are seeing this consolidation. At
Right.
some point of time, this is going to happen with the small and the mid cap index as well, because they have
Hmm.
seen a runaway rally, okay, without
Right.
the average getting broken. So as
Hmm.
long as the 20-day average doesn't break on a closing
Hmm.
basis, okay,
Right.
we would continue to anticipate that the ongoing uptrend is likely to
Hmm.
continue. Only when the
Okay.
20 breaks, that's where there can be some concerns of a correction. And
Hmm.
from a medium term perspective, it would be the 20-week average, which obviously might be very low
Hmm.
at this point of
Right.
time at
Hmm.
lower levels, because it has seen a runaway rally. Now, the
Hmm.
amazing part is that I think from year to year, it has been some 20 or 21 weeks. There has
Hmm.
been only two negative close. That too,
Hmm.
one close was doji, which means it was more or less flat. It was only one
Hmm.
week where a meaningful correction had occurred. Okay. So
Okay.
that has been the kind of up move that we have seen in the mid cap. So at some point of time, definitely this is going to cool off. Okay.
Hmm.
So one thing which I think is very evident so far is that there is a
Hmm.
lot of sector rotation that is happening.
Okay.
Okay. If sector rotation is happening,
Hmm.
that means you have to be at the right place and at the right time and in the right stock. Okay. That's where
Hmm.
you will be able to make meaningfully more money than what the market is
Yeah.
giving.
Okay.
So that's where I think there are 2 to 3 index which are
Hmm.
possibly looking up,
Hmm.
and they might either outperform or
That's right. Hmm.
they
Hmm.
they can actually give
Hmm.
significant up move as well. So
Hmm.
once you look at the IT index, you can see over here that after a correction, it has formed a base. Okay.
Okay.
And while the Nifty has inched higher, I mean, IT
Yeah.
has significantly underperformed. But now I
Yes.
think that IT index is actually trying to come out of this base. IT is one sector which I feel,
Yes.
has been underperforming and, has kind of formed a good base. So I
Correct.
think once the IT index, it actually closes above say 31,658, which was the recent high, I mean, which it had
Hmm.
formed in mid of July. If that is
Yes.
taken out on the upside, this can be one index that can participate on the upside, and that can give some alpha. As of
Hmm.
now, it is an underperformer, but yes, it is
Hmm.
expected to outperform. The
Okay.
other index, which we have spoken a lot about, is the PSU index. So
Right.
again, the story over here is the same,
Hmm.
which we have highlighted earlier, that
Yes.
is basically a 16 year kind of breakout, okay, from
Okay.
which the PSU index is coming out of.
Hmm.
So largely, I think PSU index will be the probably a very good bet in the
Hmm.
forthcoming week 10 months. Okay.
Right.
So,
Right.
so this is one sector which should be in focus for every viewers. Then the other one is the PSU index, because over here, if you see on the weekly and the daily chart, okay, I mean, first coming to the daily chart, I mean, this is one index that has held above the averages very well in the correction. And now it is trying to break out from this consolidation. So this is also one index, which can be in focus. And in the longer term, the way we are counting is that this is wave 1, 2, 3, 4, and this is fifth that is going on. And within 5, this is 1, 2, 1, 2, and 3, 4, 3, 4, 5. So that is how the path is on the upside. So this can be another interesting index. And now the other index, which so far hasn't performed well, but in line with our dollar index view. So we feel that the dollar index is topping out, like I mentioned over here. So when you see the dollar index, like I said, this is the primary trend. This is the secondary or the counter trend rally, basically what we are seeing right now. Okay. So once that is complete, eventually a downside should come by. If that happens, then it will be good for commodities. And if that is the case, then metal index, okay, which has been a laggard so far. You can see on the, on the lower time frame, it has nicely moved lower in a falling channel.
Correct.
Okay. Now it is trying to break out from this falling channel. If that happens, metal index can be another index, that can come back in focus. Okay. And that's where, probably it could be, great to look at the stocks within this, sector. But yes, broadly, what I want to highlight is that, see, there can be a chance that within the index, we may not see big moves, okay, because we have already seen a lot of churning. So, banks जब भी चलता है तभी IT, IT is kind of sleeping that time.
Right.
Then when banks are not performing, IT makes a comeback. And in fact, yes, I even forgot to discuss the wave count of Bank Nifty, but Bank Nifty again is very interesting. So, like I mentioned for the Nifty, that 20 week is very important. So in this correction, Bank Nifty has already touched the 20 week. And this week, hopefully, it is turning around. So if we see some momentum over here, again, it would be very important. And see, I'll tell you levels so that, you know what are the upside levels to watch out for. So basically for Bank Nifty, the 20-day average and the 61.8% retracement level. Okay. So which is, say, 20-day average right now is around 44,725. And the 61.8% retracement level is somewhere around 45,315.
Right.
These are the two levels that are important upside levels, which the bulls need to break, okay, to gain momentum. So it is when the 61.8% retracement mark breaks on the upside, that is where you would start thinking that this correction is complete and the next leg of up move is starting. Okay. But the wave count is already telling us that a correction is possibly done. Now we'll wait for the 61.8% level to break on the upside. Similar is the case for the Nifty index as well. Okay. Wherein 61.8% is, say, right now around 19,700 kind of levels. Okay. Once that is broken on the upside, okay, that is where a momentum will pick up on the upside. Okay.
Correct.
And that is where you can probably say with a lot more confidence that this correction is getting over and the up move is starting. But over here, like we had highlighted to the subscribers as well, many of the readings had got a bit oversold over here, okay, in sentiment. And so basically the average swing and the swing, which we look at. So wait, let me show it. So if you see the swing and the average swing, so whenever they come to around 20 kind of levels, that's where they become oversold and a bounce is due. Okay? You can see in many of the instances, and again, this is our proprietary, sentiment indicator. So you will find it exclusively only on Strike. So whenever you see, the daily swing hitting 20, So that's where it becomes oversold and then a pullback is due. Okay, you can see over here
Okay.
a pullback is due.
Hmm.
So right now, even recently, it has hit this 20 mark. So this is again giving us that confidence that maybe a near-term bottom could be in place. Similar thing is the average swing. So average swing is nothing but daily swing ka bhi average hai, which is a little more slower than the daily swing. And that had come to the oversold zone. Okay. So over here as well, you can see that once the 20-day was touched, I mean the 20 level was touched, over here we can see an up move, that is kicking in. So I think that maybe we could be very close to forming a short-term bottom. Now, whether it translates into a medium-term bottom or no, that is something that 61.8% retracement level, which I mentioned. That is where we will see if Nifty breaks above that or no. So for it is to be taken out on a closing basis.
Right.
Okay, that's where we will say that the short-term correction is complete and the uptrend is likely to continue.
Okay.
So yes, broadly this is on the Nifty and all the sectors. But the broader message is that we are going to see rotation. Okay, so be prepared for that. ऐसा नहीं होना चाहिए कि Nifty नहीं चल रहा है and you will say अरे Nifty तो नहीं चल रहा है. But there are a lot of stocks that are moving higher, and that is where the focus should ideally be.
Okay, so be prepared because we are going to see a rotation, and that was very well explained, Jay. Our viewers must have got very insightful. Yeah. So thank you very much for your time. And thank you very much for watching our video, guys. Follow Indiacharts for market analysis and mentorship. And do not forget to subscribe to Indiacharts channel. Press on the bell icon because then you are going to receive the notification and you can watch the video on the go as we upload it. Thank you so much. Take care.